You didn't lose money because you're unlucky. You lost it because you thought this was simple. That's how it starts for almost everyone, especially young traders across Europe, sitting in small apartments, dorm rooms, or late at night after work, staring at a glowing screen that feels like an opportunity no one around them understands. You open your first trade, believing quietly, privately, that this might be your way out of financial pressure, out of limitations, out of a life that feels too small for what you think you're capable of. And for a moment, the market agrees with you. A small win appears 20 euros, 50 euros, maybe 100 euros. It doesn't feel like money. It feels like validation, like proof that you see something others don't, that maybe you're wired differently, that maybe this could actually work for you. But then, almost without warning, the market takes it back. Not gently, not slowly, decisive. And now, you're refreshing your account again and again, watching numbers drop, telling yourself you're one decision away from fixing everything. One more trade, you say. I'll recover it. But what you don't realize yet is that this moment, this exact mindset is where the real journey begins. At the beginning, everything feels light. You deposit 100 euros, maybe 300 euros, maybe 500 euros. You call it risk capital, something you can afford to lose. But deep down, you know that's not entirely true. That money meant something before you put it into the market. It had a purpose, and now it's sitting there, waiting to either grow or disappear. You don't tell anyone, not your friends, not your family, because if it works, you want to surprise them, and if it fails, you don't want to explain it. The platform loads, and you stare at your balance. It feels like standing in front of a locked door that just opened. You take your first trade based on instinct, or something that feels like instinct. Maybe you saw it on YouTube. Maybe someone in a forum mentioned it. Maybe it just looked right, and it works. The price moves in your favor. You close early, afraid the profit might disappear, and suddenly your account is up. It's a small number, but it hits differently. Your heart races, not because of the amount, but because of what it represents. You start to think, maybe I get this faster than others. That thought is dangerous, because the next trade doesn't go your way. And instead of closing it, you hesitate. You tell yourself, it will come back. You've heard that before. The market always pulls back. Just hold. Don't panic. So you wait. Minutes turn into hours. Hours turn into days. The loss grows quietly, but your mind resists accepting it. Closing the trade would make it real. Keeping it open keeps the hope alive. Eventually, you close it at a loss, bigger than your first win. Now, you're slightly down overall, but something inside you has shifted. You're not discouraged or activated. You want to fix it immediately. So you take another trade, and another. You're no longer thinking clearly. You're reacting. At this level, the loss doesn't slow you down. It accelerates you. And that's something no one really explains to beginners. You're not just learning charts, you're confronting your own impulses for the first time. Then comes the phase where you decide to take it seriously. You've been trading for a few months now. You've watched hours of content. You've followed multiple creators. You've learned about indicators, patterns, support, and resistance. Risk management. You have notes, maybe even a small journal. You feel more prepared, more structured. So you deposit more money. 2,000 euros, 3,000 euros, maybe 5,000 euros. This time, it feels different. The numbers have weight. A 2% loss isn't just a percentage anymore, it's real money. You feel it physically. There's tension before you enter a trade. Your hands don't move as fast. That hesitation feels like growth. And in some ways, it is. You start to notice patterns. Not perfectly, not consistently, but enough to feel like progress. You begin to trust your observations. And then one day, it happens. A clean setup. Everything aligns. You enter. And the market moves exactly how you expected. You make 300 euros, maybe 500 euros in a short time. You sit back and stare at the screen. It feels like a breakthrough, like something just clicked. You start imagining what this could become if you scale it, if you repeat it, if you just stay consistent. But consistency is where most people break. Because a few days later, you take a trade that doesn't go as planned. Maybe it's news. Maybe it's volatility you didn't expect. Maybe it's just a bad read. But instead of accepting the loss, you react emotionally. You increase your size. You try to fix the trade. You convince yourself you're still right. And within a short period, you're down more than you made during your best day. Euro 800, 1,000 euros. Gone. You stare at the screen in silence, not panicking, just frozen. And this is where the behavior changes. You don't tell anyone. You don't even fully admit it to yourself. You just deposit more money quietly and continue. But something subtle has shifted. You start remembering your wins more clearly than your losses. You begin shaping your own narrative. You're not lying, you're editing, highlighting what supports your belief, minimizing what challenges it. At this stage, you're no longer just trading the market. You're protecting your identity as someone who can succeed in it. As you continue, you enter a phase that feels confusing and heavy. You've invested time, energy, and money. You're not a beginner anymore, but you're not consistent either. You start tracking everything. Your win rate, your average risk, your drawdowns. You try to be disciplined. You follow rules, but the results are inconsistent. You have good weeks, even great ones. Then, suddenly, you give it back. Not all at once, but enough to make you question everything. You start asking deeper questions. Is my strategy wrong? Am I the problem? Why can't I repeat my best performance? And this is the most dangerous place in the entire journey. Because you're close enough to success, to feel it, but not close enough to hold it. You're skilled enough to know this isn't random, but not skilled enough to fix the underlying issue. And that gap creates frustration that most people can't tolerate. Many quit here, not loudly, not dramatically. They just slowly disengage, trade less, care less, eventually stop. But the ones who continue go through something deeper. They start realizing that the problem isn't just strategy, it's behavior, it's consistency, it's emotional control, it's the ability to execute the same process regardless of outcome. And that realization changes how they approach the market. At higher levels, something shifts again. When your account grows 20,000 euros, 50,000 euros, eventually 100,000 euros, the emotional intensity fades, not completely, but significantly. You're no longer excited by every trade. You're focused. You trade less. You wait more. You become selective. You begin to understand that your edge isn't about predicting every move, it's about managing risk across many trades. You stop trying to be right. You start trying to be consistent. The market stops feeling personal. It becomes neutral, just a system of probabilities playing out over time. And then, something unexpected happens. The money starts to feel less real, not because it's meaningless, but because your relationship with it changes. It becomes a tool, a number, a metric. You think back to your early days, the excitement of making 50 euros, the adrenaline of small wins. That version of you felt more alive, more present, because everything was uncertain. Every trade mattered. Now, the stakes are higher, but the emotional response is flatter. You're rarely surprised. And that absence of surprise, that's something no one prepares you for. Because you started this journey thinking it would bring freedom, excitement, maybe even happiness. And in some ways, it does. But it also demands something in return. Focus, discipline, sacrifice. You give up time, energy, relationships, not all at once, but gradually. And one day, you realize you've become someone different, more controlled, more analytical, less reactive. And while that version of you is more capable, it's also more detached. Now, somewhere right now, there's someone opening their first trade. Maybe they're in London, Berlin, Paris. Maybe they're sitting in their room late at night, just like you were. They see a small win and feel that spark, that belief, that quiet confidence that they might be different. And they might be, but not in the way they think. Because trading doesn't reward who you are at the beginning. It reshapes you into someone else entirely. So, if you're losing right now, if you're frustrated, if you're questioning whether this is worth it, that's not failure. That's the process. The real mistake isn't losing money. It's refusing to learn from it. The goal isn't to win fast. It's not to double your account in a week or hit some unrealistic milestone. The goal is to survive long enough to understand yourself under pressure, to become someone who doesn't repeat the same mistakes, someone who can operate with clarity even when the outcome is uncertain. Because in the end, the market doesn't just test your strategy, it tests your identity, and the version of you that succeeds won't be the same one who started.